kind of went through some of our past deals recently. We came up with a little list. You know, because our biggest competition right now is cash deals. So we have 149 pre-approvals issued, and we got to convert those in order to stay in business, of course, as a lender. So a lot of our competition is cash. You know, so we're competing against cash offers. So how do we make our buyers more competitive and we get our offers accepted? So that's kind of where we came up with this list and some of the things that we're doing. So number one, we put submit an offer with an underwritten pre-approval. So we're having our pre-approvals underwritten up front, and then by doing that we can do like a 7-day commitment, and then we'll close it like in 14 days, sometimes even quicker if we need to. Because basically we just did the work up front.
What did you say that you have to give from the buyer in order to give them the 7-day loan commitment? What extra info do you need?
Just the full document package.
Okay.
And then we verify employment, verify assets. Basically we do everything up front. So once the contract comes in, all we need is appraisal, insurance, survey title.
I mean, because that's huge. Because you know, I did a 15 before, and that was good. But to have a 7, you know, it's almost like cash if you're waiving the appraisal contingency. If you don't want to waive the finance contingency.
Right. Yeah, in certain types of files you can't do that quick, like appraisal, like condos. Like if we're doing like a full review on a condo, like there's no way the HOA is going to get us the docs back, and it's just not going to. They're probably not going to be approved by the HOA in that time anyway.
It usually takes 2 weeks.
Yeah.
At least.
Mm-hmm.
So the biggest thing, and so if we're doing a financing clause, we want to make sure too that the condo is approvable, and the condo doesn't have issues, because that could affect their loan approval. So we want to make sure we get that done in that time frame. 2, offer to pay over appraised value. That's pretty common right now, where you're doing a set amount, you know, over appraised value if it comes in low, up front in writing. 3, allow the seller to do the rent back of the property. So they can do this for up to 60 days. So if it's a primary residence, the client does have to occupy within a 60-day window. But sometimes it's good if the seller's selling their house and they need time, say, listen, we'll do a rent back for 60 days. We just have, for our loan, we just have to occupy within 60 days. If it's a second home, or primary or second home, if it's an investment property, obviously it doesn't matter. Waive the appraisal contingency. That's another one. If the client just got to make sure he has enough cash to make that work. Sometimes in those instances too, like what we can do is like if the guy's putting 20% down, if the appraisal comes in low, we can run the numbers maybe at 5% down of the appraised value. So his cash to close can stay the same. It's just he would have some mortgage insurance. So we can play with the numbers sometimes, so it's not that big of a hit if it comes in low. We've been doing this a lot lately. We just did one and just closed one a couple weeks ago in Abacoa with this one. I think it was the highest price sale in there. Waive the financing contingency altogether. So what we'll do is like a 10-day inspection, cash contract, and then we'll get the commitment back for the loan approval, and we'll get the appraisal back within the 10 days. So we'll get everything done within 10 days, and then that way after that 10 days, the client has the option to either proceed or not proceed.
How easy is it if the appraisal comes in way lower than you expect? Can you guys submit a new appraisal? Sometimes I know lenders won't do a, what is that? I don't know.
Reevaluation.
Yeah, revaluation, that's the word.
So all of our appraisers have agreed to look at additional comps.
Okay.
What's the turnaround for that?
Usually a couple days, at least.
Not over a week, right?
No, definitely not.
What's the biggest swing you've seen on the rebuttal?
I'm
A
waiting.
lot of times what happens, I mean, just being honest, what happens is that everybody agrees, like, hey, we all think the value is X. And then when you get when you ask the realtor for the comps, like the comps are like way outside the area, or like, you know, wood frame homes instead of concrete homes, or, you know, stuff like that. So they don't, a lot of times they don't make sense. But obviously if they missed a comp, you know, or there was something, you know, there, then they'll take a look at that.
Do you think appraisers right now are taking into account like the
How hot the market is.
insaneness of the market, and every month it's going up and all that?
Yeah, we're seeing time adjustments on
Time
ours.
adjustments?
I saw that. I just got one of those.
Wow.
Oh, right.
Yeah.
That's crazy.
Because the market's going up so quickly.
Wow.
But good appraisers like Charles and these guys, like, they understand it. Like, they're
Right.
in the market, they get it. But obviously they have to support it. They have to they have to make sure that they're within the Fannie Mae guidelines.
Right.
So you have to understand all these, you guys have all seen an appraisal report, right? It's like 30-something pages, and has all this data. So the appraisal report has another file that goes along with it called an XML file. It's like the data of all the fields in the appraisal report. So when we get that appraisal back, that file gets like uploaded into a system, and then it goes through a system through Fannie Mae. So Fannie Mae then reads the data. So think about it, the government, Fannie Mae, they're getting this data dumps of appraisals all day long, all over the area. So, you know, if this appraiser is appraising the neighbor's house, the exact same unit, square footage, bed, bath, and count for, you know, 400 grand, and this appraiser comes in at 450, they're gonna flag it and be like, hey, what's the deal here? Let's make sure that so then it gets flagged through collateral underwriter, and then the appraiser has to justify it. Appraiser could lose his license, you know. So it's not just like black and white, you know, opinion of value. There's a lot of checks and balances in place. 6, pay cash for the property, do delayed financing. So we've done that a few times. That's basically where you just pay if the client has the ability, they would pay cash for the property, and then we'll put the loan on after the fact. So if they want to do like a week closing, just pay cash, make it look strong, and then we'll just do it's called the delayed financing refinance. But we'd give them the loan and give them their cash back a few weeks after closing. 7, work with a trusted local lender. Obviously that, you know, if the client's working with an online company or a bank or something like that, you might want to talk to a local lender, such as ourselves, or someone who's local in the market. A lot of the listing agents know us, they trust us. We have a high level of accountability. 8, obviously that's a controversial subject these days, is this whole, you know, love letter to the seller. You just got to be super careful not to put anything that's identifying to the family, as far as like race, ethnicity, gender, all that stuff.
Really?
But we've had that.
In the buyer's letter to that, or
Right.
your own
Yeah.
letter?
Yeah, because even if you put a picture in there and you had, and let's just say they deny the contract, but they saw you're a certain ethnicity, obviously that could be a problem.
Oh, wow.
But where I've seen this go a long way is for VA loans, for veterans, where you have the veteran just write a letter about the service, you know, it's an honor to serve our country, all that. And then we take that and you send it in, and hopefully you have a seller who's, I mean, we just had one where it was like multiple offers, and the seller, his dad was in the Navy, and these were 2 Navy buyers. And, you know, they took the deal. It was like the worst deal out of all the contracts.
I've had that happen quite a bit.
So I'd say for VA for sure, do that. But just be careful.
Writing a letter saved me on one.
Yeah. Yeah.
Crazy. What a paragraph or 2 can do.
Yeah. You know, condos are a whole nother kind of asset class that's super tough. If a lender is not used to doing condos in Florida, especially if it's over a 75% loan to value, you might want to work with a lender that just specializes in condos, because they can be tough. I mean, we just got a deal from, like, you know, Quicken denied it like the day before closing, saying, oh, we can't get the condo approved. We got the deal, we closed it in 2 weeks, and we got the condo approved. So just, you know, the condos are a little bit tricky, so you might want to make sure that you work, and then let the listing agent know that, hey, listen, they've done deals in this condo building before, maybe they already have it approved or pre-approved. And asking the listing agent to fulfill the seller's needs, like what is important to the seller, and just finding that and try to sell it accordingly.